Welcome back to Skytech-Lens. Russia's economic strategy now hinges on a risky move: printing money to cover a ballooning budget deficit. The war in Ukraine and Western sanctions have sent government spending soaring, far outpacing revenues. To fill the gap, the Kremlin is creating new rubles, through both direct money creation and complex financial maneuvers. This keeps the military running and pays state obligations, but it's a temporary fix that hides deeper economic decay. Injecting money without increasing real goods and services only fuels inflation. As the money supply outpaces production, each ruble loses value. Classic inflation. The government is diluting its own currency to fund immediate needs, prioritizing war over long-term stability. This is a high-stakes gamble. Can the state manage inflation long enough to achieve its goals? The early results are clear: rising prices, economic pressure, and growing fragility. The feedback loop of inflation and instability is only getting harder to control. For ordinary Russians, the government's financial tactics mean one thing: life is getting more expensive. Inflation is climbing fast, with double-digit rates expected soon, eroding living standards daily. Groceries, housing, and utilities all cost more, squeezing families and especially hurting pensioners and those on fixed incomes. Savings lose value, and imported goods become scarce and pricier. The Kremlin's promise of stability is undermined by its own policies. Businesses face rising costs and pass them to consumers, fueling a vicious cycle of price hikes and wage demands. As real incomes fall, people cut spending, hurting businesses, and choking economic growth. Persistent inflation breeds uncertainty and erodes trust in institutions. People rush to spend before money loses more value, making inflation worse. The government can control the media, but not the price tags. This daily economic pain threatens long-term social and political stability. Russia's budget crisis is driven by massive war spending. About a third of the public budget now goes to defense. The economy is being retooled for war, diverting resources from health, education, and infrastructure. Tax and energy revenues can't keep up, forcing the government to borrow heavily for military consumption, not growth. Every ruble spent on war is one not spent on society's needs. Corruption and inefficiency thrive in this opaque, militarized system. The war economy enriches a select few while draining public wealth. This level of spending is unsustainable without printing money, devaluing citizen savings. The short-term goal of sustaining the war undermines long-term economic stability. Russia's pursuit of military strength is eroding its economic foundations. Sanctions have squeezed Russia's economy, slashing energy revenues and forcing costly pivots to Asian markets. Oil and gas now sell at discounts, with higher transport costs and lower profits. Sanctions also block access to critical imports, raising production costs and stalling modernization. Manufacturers pay more for supplies, passing costs to consumers. A severe labor shortage, worsened by war mobilization and emigration, drives up wages and prices. The military pulls workers from other sectors, deepening shortages. Sanctions and demographics leave few options to fix this. The result: a powerful inflationary storm that monetary policy can't tame. Russia's National Welfare Fund was once a robust safety net, built from years of energy profits. War costs and sanctions have forced the government to drain this fund rapidly. The liquid portion has halved, with much of what's left tied up in hard-to-use assets. With the fund depleted, the government's main non-inflationary financing tool is gone. Now it must rely on printing money, raising the risk of runaway inflation. The fund's decline signals to citizens and investors that resources are running out. Confidence in the government's financial management is eroding. The financial fortress is cracking, exposing deep vulnerabilities. Russia's money printing is more digital than physical, mainly through the domestic bond market. The Treasury issues bonds, banks buy them with cheap central bank loans, and new money enters the system. This circular flow funds government spending and injects liquidity, fueling inflation. Reports suggest physical banknote printing is also rising, further unanchoring inflation expectations. Both digital and physical money creation debase the ruble, reducing everyone's purchasing power. It's a hidden tax on savers and businesses, funding the state at the public's expense. The consequences are becoming impossible to ignore. To fight inflation, Russia's central bank has hiked interest rates to punishing levels, up to 21%. This classic move is meant to cool spending, but it's hurting businesses with variable rate loans. Corporate interest payments have soared, crushing investment and daily operations. Banks, facing a wave of struggling borrowers, are restructuring loans to hide distress. Balance sheets fill with zombie loans unlikely to be repaid. This hidden fragility risks a banking crisis if defaults spike. Sanctions limit banks' options, and a major failure could trigger a domino effect. A government bailout would mean more money printing, fueling the inflation fire. The cycle threatens to spiral into deeper crisis. Russia's path echoes the disasters of Venezuela and Zimbabwe, nations that printed money to cover deficits and spiraled into hyperinflation. In Zimbabwe, relentless money printing led to worthless currency and economic collapse. Venezuela's similar strategy triggered runaway inflation, empty shelves, and mass exodus. Both cases show that printing money to fund unproductive spending destroys economies and societies. Russia's economy is larger, but the laws of economics are the same. Early signs, rising inflation, a weakening ruble, and depleted savings are already visible. There's no shortcut to prosperity through the printing press. The lesson is clear: this path ends in disaster. Economic ruin and human suffering always follow. Russia's crisis won't stay contained. Global energy markets and supply chains are at risk. Disruption to Russian exports could spike global prices and fuel worldwide inflation. Neighboring economies and global businesses tied to Russia would feel the shock. A banking collapse or debt default could trigger regional financial contagion. To avoid disaster, Russia must cut non-productive spending, especially war costs, and shift to productive investment. Fiscal discipline is essential. Raise taxes, cut spending, or both. Deep reforms are needed: rule of law, transparency, and a competitive business climate. The central bank must be independent, free from political pressure. These changes challenge the current regime's priorities. Without reform, Russia risks trading a short-term fix for a far greater catastrophe. Thanks for watching a video, and subscribe the channel now for more updates. Thanks.